The car market is heading for a cliff. The once thriving industry, a cornerstone of economic growth and consumer confidence, is now teetering on the edge of a precipice. The car market, once a symbol of robust growth and consumer confidence, is teetering on the brink of a colossal crash. For decades, car sales have been a reliable indicator of economic health, with bustling dealerships and eager buyers driving the market forward. After years of soaring prices fueled by unprecedented demand and crippled supply chains, the bubble is about to burst. The pandemic exacerbated these issues, creating a perfect storm of high demand and low supply, pushing prices to unsustainable levels. Experts predict a dramatic correction, with prices potentially plummeting by as much as 88% in the coming months. This forecast is based on a combination of factors, including rising interest rates, increasing production costs, and a shift in consumer behavior. This impending collapse has sent shockwaves through the industry and beyond, raising concerns about its impact on the broader economy. The car market's downturn could have a ripple effect, influencing everything from manufacturing jobs to financial markets. The warning signs have been flashing for months. Industry analysts have been sounding the alarm, pointing to declining sales figures and increasing inventory levels as clear indicators of trouble ahead. Dealerships are overflowing with unsold inventory. The once bustling lots are now filled with cars that simply aren't moving, creating a significant financial burden for dealers. Manufacturers are slashing prices and offering hefty incentives to lure hesitant buyers. From 0% financing to cashback offers, the deals are more enticing than ever, yet buyers remain cautious. The used car market, once a safe haven for bargain hunters, is experiencing its own dramatic downturn. Prices for used vehicles, which had skyrocketed during the pandemic, are now plummeting as supply catches up with demand. The stage is set for a market crash unlike anything we've seen in recent history. The combination of economic factors, changing consumer preferences, and the lingering effects of the pandemic have created a volatile situation that could reshape the car market for years to come. As the market continues to unravel, many consumers are finding themselves underwater on their car loans, with vehicles worth far less than what they owe. Repossessions are on the rise, adding to the financial strain on families already struggling with inflation and rising living costs. Meanwhile, the industry is also grappling with a technological revolution. The shift towards electric and autonomous vehicles is accelerating, creating both opportunities and challenges for traditional car manufacturers. Companies are investing heavily in new technologies, but the transition is costly and fraught with uncertainty. The move towards greener, more sustainable transportation is a necessary evolution, but it comes at a time when the industry is already under immense pressure. Balancing the need for innovation with the realities of a struggling market is a delicate act that will require careful navigation. Additionally, changing attitudes towards car ownership are influencing the market. In urban areas, more people are opting for public transportation, ride-sharing, and other alternatives to owning a car. This shift is particularly pronounced among younger generations who prioritize sustainability and flexibility over traditional car ownership. As the market adjusts to these new realities, we may see a rise in car auctions and other methods of offloading excess inventory. Dealers and manufacturers will need to get creative in finding ways to move their stock and mitigate losses. Despite the challenges, there are still pockets of optimism within the industry. Car enthusiasts and collectors continue to drive demand for classic and specialty vehicles, providing a bright spot in an otherwise bleak landscape. For consumers, the coming months may present opportunities to find deals on new and used cars as prices adjust and incentives become more attractive. However, it's important to approach these opportunities with caution, considering the broader economic context and potential risks. As we navigate this turbulent period, the importance of maintaining and servicing existing vehicles cannot be overstated. Regular maintenance can help extend the life of a car, providing a buffer against the uncertainties of the market. The road ahead for the car market is uncertain, but one thing is clear: change is inevitable. How the industry adapts to these challenges will shape the future of transportation for years to come. Buckle up, because it's going to be a bumpy ride. The perfect storm: how we got here. The roots of this impending crisis can be traced back to a confluence of factors that created the perfect storm for a car market bubble. The global semiconductor shortage, triggered by the COVID-19 pandemic, crippled car production just as demand skyrocketed. Consumers, flush with stimulus checks and eager to spend after months of lockdown, found themselves competing for a dwindling supply of new vehicles. This surge in demand, coupled with supply chain disruptions and rising inflation, sent car prices soaring to unprecedented heights. Dealerships, sensing an opportunity, marked up prices even further, leading to a situation where cars were selling for well above their suggested retail value. The used car market followed suit, with prices of pre-owned vehicles reaching astronomical levels. The market, however, was living on borrowed time. The numbers don't lie, prices are plummeting. Across the nation, car dealerships are grappling with a significant downturn in vehicle prices. This trend is not just a blip on the radar, it's a substantial shift that has been building momentum over the past several months. The once robust car market is now showing signs of strain, and the effects are rippling through the industry. The cracks in the car market facade are becoming impossible to ignore. Dealerships that were once bustling with activity now stand eerily quiet, with rows of unsold cars gathering dust. The lack of foot traffic is a stark contrast to the high demand seen in previous years. This shift is causing concern among industry experts and car manufacturers alike. Data from leading industry analysts paints a grim picture of declining prices and waning demand. Reports indicate that consumer interest in purchasing new vehicles has dropped significantly. Economic uncertainties, rising interest rates, and changing consumer preferences are all contributing factors. Analysts are closely monitoring these trends, trying to predict how long this downturn will last and what it means for the future of the car market. Kelley Blue Book reports that the average price of a new car has fallen by 12% in the past 3 months alone. This decline is unprecedented and has caught many by surprise. The report highlights that even popular models are not immune to these price drops. Dealerships are being forced to offer significant discounts to attract buyers, further driving down the market value of new cars. Used car prices, while still elevated compared to pre-pandemic levels, have tumbled by 20% since the beginning of the year. This drop is a double-edged sword. On one hand, it makes used cars more affordable for consumers. On the other hand, it signals a broader issue within the automotive market. The rapid depreciation of used cars is causing concern for both sellers and buyers, as it affects trade-in values and overall market stability. Specific models tell an even more dramatic story. High-end and luxury vehicles, which once commanded premium prices, are now seeing some of the steepest declines. This trend is particularly evident in electric and hybrid models, which were previously in high demand due to their eco-friendly appeal and advanced technology. The price of a 2022 Tesla Model 3, once a coveted status symbol, has plummeted by over 30% in the past 6 months. This dramatic drop is a clear indication of shifting market dynamics. Tesla, known for its innovation and cutting-edge technology, is now facing the same market pressures as traditional automakers. The significant price reduction is aimed at boosting sales and clearing out inventory, but it also raises questions about the long-term value of these vehicles. Nissan, facing mounting inventory pressure, has slashed the price of its popular Altima sedan by a staggering $5,000. This aggressive pricing strategy is a response to the growing inventory backlog and the need to stimulate sales. The Altima, known for its reliability and affordability, is now even more accessible to buyers. However, this move also highlights the challenges Nissan is facing in maintaining its market position amidst the current downturn. These price cuts, while enticing to some buyers, are a clear indication of a market in freefall. For consumers, this could be an opportune time to purchase a vehicle at a reduced price. However, for the industry, it signals a period of uncertainty and potential restructuring. The coming months will be critical in determining whether these trends are temporary or indicative of a more permanent shift in the automotive market landscape. Experts agree the crash is imminent, the signs are everywhere, and the consensus is growing stronger by the day. The car market, once a booming sector, is now teetering on the edge of a precipice. Industry experts and market analysts are united in their assessment. The car market crash is not a matter of if, but when. The data is clear and the trends are unmistakable. Sales figures are plummeting, inventories are piling up, and consumer confidence is waning. The market is saturated, and the demand that once drove it forward is now evaporating. Economist Paul Krugman, in a recent op-ed, warned that the car market is a bubble on the verge of bursting, and that the consequences could be severe. He pointed out that the rapid rise in car prices over the past few years was unsustainable, driven by speculative buying and easy credit. Now, as the economic landscape shifts, the bubble is set to burst, and the fallout could be widespread. Morgan Stanley, in a research note to investors, predicts a 40% decline in new car prices over the next 12 months. This stark prediction is based on a comprehensive analysis of market trends, consumer behavior, and economic indicators. The firm warns that the decline will not be gradual, but rather a sharp and sudden drop, catching many off guard. The reasons for this dire outlook are clear. Multiple factors are converging to create a perfect storm that is driving the market towards collapse. The once robust demand for new cars is drying up, and the supply chain issues that have plagued the industry are far from resolved. The semiconductor shortage, while easing, is still causing production delays. This has led to a backlog of orders and a mismatch between supply and demand. Car manufacturers are struggling to keep up with production schedules, and the delays are causing frustration among consumers and dealers alike. Interest rates are rising, making car loans more expensive. As the cost of borrowing increases, fewer consumers are willing or able to finance new car purchases. This is leading to a significant drop in sales, further exacerbating the market's woes. The era of cheap money is over, and the impact on the car market is profound. Consumers, grappling with inflation and economic uncertainty, are pulling back on big-ticket purchases. The rising cost of living is forcing many to prioritize essential expenses over discretionary spending. As a result, the demand for new cars is plummeting, and dealerships are struggling to attract buyers. The perfect storm that fueled the car market bubble is now working in reverse, pushing it towards a dramatic collapse. The combination of supply chain disruptions, rising interest rates, and declining consumer confidence is creating a scenario where the market can no longer sustain itself. The crash is not just imminent, it is inevitable. The industry must brace for impact and prepare for a period of significant upheaval and transformation.